energy stocks popping on the back of that. They've jumped more than 34% since the end of June. Rochelle, there's a number of threads here, I think, to work through. Number one, when you look at where the energy sector has performed on the back of oil, certainly gaining in a big way. It is the best performing sector this month. At the same time, there is a question here, number one, about what's driving those prices higher, but also about at what level demand destruction is likely to begin. We've heard from Andy Lipow, for example, a regular on the show, saying that he believes that it could be anywhere from $100 to $110 a barrel, because that would push gas prices above $4 a gallon. Some would argue, though, that destruction already starting to take shape as we sort of stay above that $90 a barrel level.
It's true. I mean, and we've been seeing this creeping up for the past few months. Brent and WTI up around 30% over the past 3 months. And when you look at some of the biggest energy companies, apart from Shell, which is in single-digit growth over the past 3 months, ExxonMobil, Chevron, Conoco, Total, BP, they've all seen double-digit stock price growth over the last 3 months. And you raise an interesting point about what is going to be that tipping point. You mentioned that we're starting to see some of this demand destruction that's really been triggered by what we've seen as WTI and Brent have been really teetering around that $100 a barrel level. And it's interesting to see these oil prices rising when it's not really signaling that there is a recession ahead. But then when you look at things like the 10-year yield that's been clearly flashing recession ahead, it does make you wonder, as you said, what is sustaining these oil prices at the moment?
Yeah, and we've heard already the likes of Citi as well as Goldman calling for $100 a barrel. The question is, of course, if you're the Fed, how inflationary is this going to be and how sustained those levels are? The backdrop to all of this is, of course, these production cuts that the Saudis recently extended. You've also got the production cuts from Russia. But worth noting what exactly is playing out for the Saudis. You could argue that on the one hand, they want this to continue to be a big revenue driver. At the same time, they have been pivoting, trying at least, to find other investments beyond oil. Now, the Wall Street Journal has a good story out today talking specifically about the Saudis making a bet on where the market is willing, or what the market is willing to pay on oil, in part to continue to drive revenue on oil as they try to pivot away. They specifically talk about where that level is likely to be. The IMF has said the break-even oil price for the Saudis is about $81 a barrel. We are well above that already right now.
It's true. And when you look at some of the expansions that they're making beyond oil, a $500 million stake in Mid-Ocean Energy, which is an LNG company. So really trying to expand the horizons here while still trying to maintain this bet on oil. And, a lot of consumers wondering when they're going to perhaps see some relief at the pump. Patrick DeHaan, also known as Gas Buddy Guy, saying that gas prices in LA, where you are less than a quarter of a way from hitting their record of $6.46. And as we're continuing to see the national average starting to grow here, a lot of people wondering why aren't they seeing some relief here? So it's important to break down some of the information, as you mentioned there, about what's really propping up these oil prices, Akiko.
Yeah, Rochelle, you talk about those oil prices, or gas prices, I should say, in LA. It's a big reason why I switched over to EVs. So I find myself smiling every time I drive by a gas station, but there is certainly a lot of pain to be felt among drivers who really can't cut back on some of that driving and therefore paying a huge bill there at the gas pump.